Now I am going to discuss about financial management. First of all, we have a brief introduction about financial management. Financial management is that part of management activities which is concerned with the acquisition and conservation of funds in meeting the financial needs and overall objectives of any business enterprise. Under the financial management, now I am going to discuss about working capital management. Working capital is nothing but the capital required for day-to-day operation. Not only for day-to-day operation, even for weekly, even for monthly, even for quarterly, even for half-yearly, even for annually, we are estimating the working capital, the capital which is required for running the business, which is represented by current asset minus current liabilities. Now we will move to the problem there. The following information is available in respect of Amala Limited. Stock holding, raw material 1 month, work in progress 15 days, finished goods 1 month, debtors collection period 2 months, time lag in payment of bills 45 days. We are going to calculate first of all operating cycle, second one number of operating cycles in a year assuming a 360-day year, then third one average working capital required if annual cash operating expenses are rupees 180 lakhs. Now we are going to calculate operating cycle. In the problem they given stock holding 1 month, that is nothing but 30 days. Then we have to add work in progress 15 days, finished goods 1 month, that is equal to 30 days, debtors collection period 2 months, that is 60 days. Then deduct average payment period 45 days. So add up all this amount, that is raw material 30 days, work in progress for 15 days, finished goods 30 days, debtors collection period 60 days. Then deduct the average payment 45 days, we will get the operating cycle 90 days. Then we are moving to the second part, that is computation of number of operating cycle in a year. Number of operating cycle in a year equal to number of days in a year divided by operating cycle. In the problem they given number of days in a year 360 days. So 360 days divided by operating cycle, we have already calculated 90 days. So 4 cycles we are just operating in a year. Then we are going to calculate average working capital required. Average working capital equal to annual cash operating expenses divided by number of operating cycles. Annual cash operating expenses in the problem they given 180 lakhs divided by number of operating cycles 4 times, that is 4 cycle, which equals to 45 lakhs. Then we are moving to the next model, calculating the operating cycle of a company, which gives the following details related to its operations. Raw material consumption per annum 8,42,000, annual cost of production 14,25,000, annual cost of sales 15,30,000, annual sales 19,50,000, average value of current asset held, raw material 1,24,000, work in progress 72,000, finished goods 1,22,000, debtors 2,60,000. The company get 30 days credit from its suppliers. All sales made by the firm are on credit only. You may take 1 year as equal to 365 days in the problem they given. So we have to calculate the operating cycle. So first we go for the raw material held to stock. Average stock of raw material divided by raw material consumption into 365 days. So in the problem they given average stock of raw material is 1,24,000 divided by raw material consumption, it is 8,42,000 into 365 days, it comes around 54 days. Then we have to calculate second one, work in progress. Average stock of work in progress divided by production cost into 365. Average stock of work in progress, it is 72,000, production cost 14,25,000 into 365 days, it comes around 18 days. Finished goods held in stock. Average stock of finished goods divided by cost of sales into 365 days, that is average stock of finished goods 1,22,000 divided by cost of sales 15,30,000 into 365, it comes around 29 days. Then credit period allowed to debtors. Debtors divided by sales into 365 days. Debtors in the problem they given 2,60,000. Sales they given 19,50,000 into 365, it comes around 49 days. Just add up all this amount, current asset, then deduct the liabilities, that is average credit period allowed by creditors. In the problem they given 30 days. So deduct the 30 days from the current asset. It comes around 120, that is net operating cycle period. Then we are going to the next model. A pro forma cost sheet of a company provides the following particulars. Raw material cost 100 rupees they given per unit. Direct labor cost 37.50. Overhead cost 75 rupees. Total cost it comes around 212.50. Profit 37.50. Selling price 250. The company keeps raw material in stock on average for 1 month, work in progress on average for 1 week, and finished goods in stock on an average for 2 weeks. The credit allowed by supplier is 3 weeks, and company allows 4 weeks credit to its debtors. The lag in payment of wages is 1 week, and lag in payment of overhead expense is 2 weeks. The company sells 1/5 of the output against cash and maintains cash in hand and at bank put together at rupees 37,500. We are going to prepare a statement of working capital needed to finance an activity level of 1,30,000 units of production, assuming that production is carried on evenly throughout the year and wages and overheads accrue evenly or similarly. Work in progress stock is 80% complete in all respect. First of all, the activity level in the problem they given 1,30,000 units. We are going to prepare a statement showing estimation of working capital need. For that, we are just going to prepare the current asset. So, investment in inventory. Raw material inventory in the problem they given 1 month. So, activity level 1,30,000 into 1 month is equal to 4 weeks. So, 4 by 52 into rupees, cost is 100. So, it comes around 10 lakhs. Then, work in progress inventory 1 week. So, activity level 1,30,000 into 1 by 52 into 80%, that is 0.80 into total cost 212.50. It comes around 4,25,000. Then finished goods inventory 2 weeks they given 1,30,000 into 2 by 52 into total cost 212.50. It comes around 10,62,500. Then we are going to calculate the investment in debtors. They given the problem 4 weeks at cost. 1,30,000 into 4 by 5, that is the problem they given the company sell 1/5 of the output against cash. So cash sales is 1/5 means the remaining 4/5 is credit sales. So 1,30,000 into 4 by 5 into 4 by 52 into 212.50, it is 17 lakhs. Then we have the cash balance, the problem they given 37,500. You just add up all this amount. Investment in current asset is 42,25,000. Then just to see the current liabilities, the problem current liabilities creditors they given 3 weeks. So 1,30,000 into 3 by 52 into raw material cost only you have to take there 100 rupees. It comes around 7,50,000. Then deferred or lag in payment of wages 1 week they given 1,30,000 into 1 by 52 into 37.50. It comes around 93,750. Then lag in payment of overheads 2 weeks they given 1,30,000 into 2 by 52 into 75 rupees. It comes around 3,75,000. So total current liabilities 12,18,750. So net working capital need is nothing but current asset minus current liabilities. 42,25,000 minus 12,18,750. That comes around 30,06,250. Then we are moving to the next model. From the following information, you are required to estimate the net working capital requirement. Cost per unit they given. Under the cost per unit, raw material is 400, direct labor 150, overheads excluding depreciation 300, total cost 850. Additional information: selling price rupees 1000 per unit, output 52,000 units per annum, raw material in stock average 4 weeks, work in progress assume 50% completion stage with full material consumption average 2 weeks, finished goods in stock average 4 weeks, credit allowed by suppliers average 4 weeks, credit allowed by debtors average 8 weeks, cash at bank is expected to be 50,000. Assume that production is sustained at an even pace during the 52 weeks of the year. All sales are on credit basis. State any other assumption that you might have made while computing. First we have to prepare the net working capital requirement. Under the net working capital requirement, we have to prepare the current asset. Under the current asset, stock of raw material, the problem they given 4 weeks. So 52,000 into 400, that is 400 raw material cost, into 4 by 52, it comes around 16 lakhs. Then stock of work in progress, in the problem they given 2 weeks. So raw material 52,000 into 400 into 2 by 52, that comes around 8 lakhs. Then direct labor 50% completion. So 52,000 into 150 labor cost into 2 by 52 into 50%. It comes around 1,50,000. Then overhead 50% completion. 52,000 into 300 into 2 by 52 into 50 by 100. It comes around 3 lakhs. Altogether work in progress 12,50,000. Then stock of finished goods 4 weeks they given. 52,000 into 850 into 4 by 52, it comes around 34 lakhs. Amount blocked in debtors at cost. In the problem they given 8 weeks. So 52,000 into 850 into 8 by 52, that comes around 68 lakhs. Then in the problem they given cash at bank 50,000. So just add up all this amount, it comes around 1 crore 31 lakhs. Less current liabilities, creditors for raw material 4 weeks. 52,000 into 400 into 4 by 52, it comes around 16 lakhs. So 1 crore 31 lakh minus 16 lakhs, it comes around net working capital required 1 crore 15 lakhs. Next we'll move to the next model. From the following information, prepare a statement showing the estimated working capital needs in total and for each constituent. Budgeted sales, they given 52 lakhs per annum. Analysis per unit of sales, raw material cost 25 rupees, direct labor 45, overheads 20, cost of sales 90, profit 10, sale price per unit 100. It is estimated that first raw material will be carried in stock for 2 weeks and finished goods for 3 weeks. Factory processing will take 4 weeks. Suppliers will give 4 weeks credit and customer will require 7 weeks credit. It may be assumed that production and overheads arise evenly throughout the year. Now we are going to prepare the statement showing estimated working capital required. First we see the current asset. Under the current asset, inventories, stock of raw material 2 by 52 into 5 by 20 into 52 lakhs. That 5 by 20 is nothing but raw material 25, total selling price 100. So 25 by 100, that comes around 5 by 20. It comes around 50,000. Then stock of work in progress, material 4 by 52 into 5 by 20 into 52 lakhs, that comes around 1 lakh. Labor 4 by 52 into 50%, that is 1 by 2 into 9 by 20 into 52 lakhs, that comes around 90,000. Overheads 1 by 2 into 4 by 52 into 4 by 20 into 52 lakhs, it comes around 40,000. So stock of work in progress comes around 2,30,000. Then stock of finished goods 3 by 52 into 18 by 20 into 52 lakhs, it comes around 2,70,000. Account receivable debtors 7 by 52 into 52 lakhs, it comes around 7 lakhs. 2,70,000 plus 7 lakh, it comes around 9,70,000. Then less current liabilities 12,50,000. Then creditors 4 by 52 into 5 by 20 into 52 lakhs. Okay, 1 lakhs. So 12,50,000 minus 1 lakh, net working capital required, it is 11,50,000. Thank you.